Hi, Steve Sosnick here with an Interactive Brokers midday market update for April 23rd, 2020. We're going to try a video one today. We haven't actually done this since we've all gone to work from home. So please bear with us if there's any glitches. But here we are sitting in my living room and talking to you. Markets are up again today. I don't know why. Beats me. The excuse I'm getting is that oil has rallied, but just to put that in perspective, we've rallied to about 17 on the front month contract from 14 or so. That is far from normal, far from good. Somehow, equity markets, fueled by Fed liquidity, which I refer you to my piece that I wrote on Monday, how Fed liquidity is a necessary condition for a stock market rally, but not a sufficient one. Markets seem to view that, well, it is necessary and sufficient. If the Fed's pumping in money, then let's buy stocks. I really do think that the broader equity markets are pricing in a V-shaped bottom. I don't see where that evidence is coming from. I'm sorry, I wish I could. But nothing that companies are saying in their earnings are reflecting that. Nothing that I hear from talking to intelligent people is saying that, but somehow stocks really have a mind of their own. It comes back to this. Buy the dip, don't fight the Fed, have worked really, really well for the past 12 years or so. And in general, that's really a very good strategy. But again, step back and wonder why the Fed is pumping all this liquidity in. It's not for good reasons. It's not sort of a temporary problem. This is not a financial crisis. It's becoming a financial crisis. The Fed, or it has the potential to become a financial crisis. The Fed is certainly very cognizant of that. And that's what they're protecting us against. This is not necessarily a reason to go out and speculate. There's too many businesses that are going to be too damaged. The other problems I see is we're going up on relatively light volume. The volume on the upside is not as good as the volume on the downside, and we continue to see narrow leadership. The bigger the company, the better the stock. I guess that makes a lot of sense because, quite frankly, the bigger the company, the better positioned they are to withstand the economic shock that they're having now, assuming that they're not over leveraged themselves. But this is the kind of stuff that we're really keeping an eye on, and the stuff that sort of makes me fade this rally a bit. Look, if it's going up and you're doing fine, that's wonderful. I really have a bit more skepticism here, and I hate to point to the VIX being the fear gauge, so to speak, because that's not really accurate. We've gone over that many times. The VIX is a mathematical construct as much as it is a sentiment construct. Well, it's actually a mathematical construct. It does tend to work as a sentiment construct, but if you have markets moving around a percent or two a day, you're going to get a VIX that's 30 or above. And until or unless that stops, and I don't see that happening in this work from home skittish environment, you're going to continue to see a fairly high VIX reading as well. One of the things I've been noticing is that VIX had been higher than VXN, which is the VIX equivalent on the NASDAQ. That's actually reversed a little bit today, but again, one day does not a trend make. I am a little concerned. I guess the big risk that I see is let's see what happens through earnings on the biggest cap NASDAQ names. Netflix did very well originally on their earnings and then sold off a bit. Amazon continues to just light the world on fire in terms of their stock price, but let's see what they say in terms of, are they making any money in this environment? Their retail business typically has not been particularly profitable, and there's a lot of challenges to it. So, are they able to, have reasonable margins? That's going to be one of the real great tells. And you can't avoid this kind of stuff. Let's see where earnings season takes us. So far, the market's been reasonably willing to give a lot of companies a pass because the outlook is so strange. Let's see where it goes. Talk to you tomorrow. Take care. Bye-bye.